The alarm's good for Bitcoiners. If you think about what's happening right here, Wall Street's getting an intelligence test. If you paid attention in Economics 101, you're going to pass this test. There is hundreds of millions of dollars per day flowing into these Bitcoin ETFs, and there's only about $40 to $45 million of net new Bitcoin being produced. So there's 12 and a half times more demand than there is supply being created every single day. If there's that much demand and that little supply, the price has got to go up to accommodate everyone. And so my guess is that we're about to see Bitcoin continue to grind up over the next couple of weeks.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, Bitcoin finally got over $50,000, meaning it's pretty much the highest price that we've seen in multiple years, definitely the highest price we've seen this year. But interestingly enough, and this is exactly what we were talking about, if you actually have a look right here at this parallel channel that we've been bouncing around in, again, with the exception of this bear trap down here, you could see that this is the exact area that we were looking at. And as you can see right now, we wicked slightly above it, and look at where that candle closed, right there, exactly on that line, and we're starting to pull back down again. So obviously, when I say Bitcoin warning, I'm not saying warning in a terrible way, but what I am saying is that we are at a very critical level, and I want to go over some technical analysis that we've been looking at, but also on top of that, outside of that, we have some absolutely mind-blowing data that you cannot ignore, that there may actually be a lot of people out there that are not well aware of this. Now, before we hop into that, just to show you again super quick, you know, we obviously had this falling wedge pattern. Now, this is something, if you've been following this channel, any subscriber should not be surprised that we had this breakout of the falling wedge, and right here when we had the retest, that is when we knew that the bottom was essentially in. That is a bump and run pattern, right? So what we've been doing right now is we've been putting in this sort of parabolic trend. Now, obviously at some point, Bitcoin is not gonna keep this parabolic trend. I mean, this is ridiculous. This would put us basically at $69,000 by April. Although, is that possible? Could it be? Again, that's the whole theme. Could this time be different? But as you guys can see right here, and just to show you how we got this number, basically what you do is you take the largest point right here between the top and the bottom of the falling wedge, and we bring it over to where we had that bump and run breakout. And as you guys can see right here, that brought us exactly to the 0.618 Fibonacci, which is exactly where not only we had the rejection from the ETF news, but it's also the level that we're currently just sitting at right now. So this is definitely not the time to be falling asleep. This is the time to be paying attention to Bitcoin and cryptocurrency. So in today's video, I want to, by the way, this is going to be a very quick video because I have a lot of stuff I got to do today. I'm actually kind of rushing to get this out. So if you guys do like these shorter, quick updates, obviously, you know, dropping a comment, a like does help to spread this video so that other people can see it. So let's dive in super quick. Let's get right to the point. And before we do though, did you guys see this from Joe Biden's official presidential account? Just like we drew it up. This came out 2 days ago. He's got the laser eyes. I don't know if that's a Bitcoin thing or not, but there was some speculation. Anyway, though, so really quick, guys, the thing that we have, and then we'll get to the, I want to play a few video clips for you, but you can see right here that the stocks are also at the top of their parallel ascending channel right here. And again, you know, I mean, these channels are so simple. You know, you can draw these. I mean, a 5-year-old could draw these, and you can see that we are hitting that resistance. Now, is there that possibility, you know, that the stocks could come down and retest the heart line? Well, something interesting is this is also coinciding with the fact that we had the CPI data come out this morning, and you can see right here that we did have the DXY attempting to pump basically to the top of its falling wedge pattern, right? Now, I don't anticipate a breakout for the dollar personally. Maybe there's a bit of a fake out. I do anticipate that the dollar will eventually continue rolling to the downside. But, you know, getting back to Bitcoin, just to point out, you know, again, the last time that Bitcoin was at these levels, with the exception of the little area where we had that fake out pump into the ETF, the last time was back here on October 3rd of 2021. Obviously, after that, this level acted as resistance, which is why it's such an important level. But you could see that from this point, Bitcoin got to its all-time high in just 17 days. So that goes to show you how quick the price can actually start moving at these levels. And we were able to get there in 17 days without an ETF, without the institutions, basically just on retail speculation, right? So this is why we're saying it could get even more aggressive, right? But we're not out of the water just yet. We're not out of the woods just yet. You know, we obviously do have this this parabolic, advance, I guess if you want to call it. There is always the possibility that we could fall out of it, but, you know, all that would essentially really do is, you know, just have you kind of, you know, move the channel to somewhere else, right? Because you can really just adjust these wherever you want. That's why, you know, a little bit subjective, you know, parabolic channels, they break them, they form a bigger one, break them, they form a bigger parabola. But the biggest problem, again, is just the very simple, basic resistance and support, right? So back here, when we had this candle on the week of February 8th, you could see that acted as our resistance. And then right here, it acted as our support. And obviously, it acted as the biggest resistance right here before the massive breakdown. So that's why this level is so imperative, right? Now, obviously, if we don't get above this level within the next week or so, then I do think we're going to have some kind of a pullback. You know, we could pull back anywhere to the $40,000 to $44,000 area. Although I would be kind of surprised considering that there was this much area. We had all these weeks right here of accumulation within that range. So realistically, what you'd be looking for after the breakout would be just a very simple retest down to about the $44,000 area, right? So again, I wouldn't be getting too concerned over this because according to the Lux Algo indicators right here on the oscillators, we have about an 82% strength, trend strength, which basically means that there's an 82% chance, according to statistics, once we get above these bands, that we're going to stay in this trend. So basically what I'm trying to say is, could we have a potential pullback to 44,000? Very possible. 40,000? Still possible, not as possible, but, you know, in the short term. But again, we could just keep going. As I said, there's an 82% chance we do continue breaking out to the upside. And we have seen that once we do get above these EMA ribbons, we do tend to stay above them for quite a long time. So super quick TA, just trying to get it out of the way. We need to hold above this level. Roughly, we need to basically stay above 48,600, and we need to close above that this week. If we do close above that level, the next target we talked about is $55,000, okay? So we're not really in no man's land anymore. We're a little bit more in the bullish area, but we still don't have that full-on ultimate super confirmation that we're going to continue to the upside, right? We still need a little bit more time to potentially dance around these areas or even retest that $44,000 area. But this is the thing. So we talked about the $55,000 area. Apparently, I'm not the only one that sees it, because there are a lot of people that are currently short right now. And what's kind of crazy, I'm not saying you should or shouldn't be short, that's up to you. But if Bitcoin was in fact to hit $55,000, we would have $800 million worth of shorts that would be liquidated. That's insane. And, you know, sometimes when you have a lot of people starting to go in one direction, you will get a short squeeze, right? And what will happen is then you get these God candles, right, that basically liquidate all these shorts. They reset all the fundings and all that. And that's kind of where you find that equilibrium. So I would just be careful, considering that there's a lot of shorts starting to pile up right now. They may be right in the short term, but again, that's a lot of potential liquidations in the event that we do go up to those levels. So what I wanted to talk about today, again, super quick video, is if you have a look at the 25 biggest ETFs based on their assets per 1 month data, out of 5,535 ETFs that have come out in the last 30 years, the spot Bitcoin ETFs from BlackRock and Fidelity are on top, and man, are they on top by a lot. So this isn't just a one-off. This is a historical moment. This is not very common for ETFs. This is clearly showing demand for a new asset class. And, you know, Anthony Pompliano was over on CNBC, and basically what he was discussing is if you just do the simple math, the simple, you know, economics 101, you're going to see that right now, based on these inflows that we're seeing, there's about a 12.5% more demand right now than there actually is supply.
I mean, look, the verdict's in, right? Wall Street doesn't just like Bitcoin, they love Bitcoin. If you think of these assets, there's been over 5,500 ETF launches in history. Never have we had a fund get to $3 billion in AUM in the first 30 days. BlackRock and Fidelity both just did it. So two for the first time in history. And then if you look at Bitwise and 21 Shares, ARK, they're both going to hit $1 billion this year or this week. And so now you have 4 funds that are going to hit $1 billion of inflows.
But the most interesting part of this is the inflows. These funds are doing $500 million a day of net inflows, but there's only 900 Bitcoin that is actually coming into the daily incoming supply. And so when you look at that, that's like $40 to $45 million. There's 12.5x more demand for Bitcoin than what's being produced on a daily basis.
So how much of this do you think is being generated by the ETFs themselves?
Well, I mean, you just measure the actual net inflows, right? And so you can just see there is way more buying pressure.
So you're saying $3 billion for BlackRock.
There's $4 billion now for BlackRock, 3.5 for Fidelity, and then you've got Bitwise and 21 Shares will both hit about $1 billion this upcoming week.
Total valuation, though, of Bitcoin,
$1 trillion.
The market cap is $1 trillion. So isn't this a de minimis issue or no?
Now here's where it gets really interesting.
Most of these things aren't trading.
80% of all Bitcoin in circulation has not moved in the last 6 months. You have only about $200 billion is actually tradable. And so that means that these ETFs sucked up 5% of the entire tradable supply of Bitcoin in 30 days. I mean, Bitcoin is become Wall Street's favorite asset.
And the other thing that you have to consider is that this extends far beyond just the simple ETF products alone, right? Obviously, Fidelity Canada is saying 1 to 3% allocations in their own baskets, and this could have a trickle-down effect, a snowball domino effect into many others as well.
Well, look, the world is changing for sure. I mean, last year, the NASDAQ was up 50%, right? And so there's definitely these big moves that happen in the traditional markets. Bitcoin, obviously, is that on steroids. But the other thing that's now starting to happen, Fidelity just came out, and they've got a fund. It's an all-in-one fund out in Canada. And they're going to put 1 to 3% of that fund into the Bitcoin ETF. And so what you're going to start seeing is not just direct inflows into the Bitcoin ETFs, you're going to start seeing them putting Bitcoin into all of their funds because it, from a risk reward standpoint, drastically improves the performance of these portfolios. And they're going to start to realize if I'm lagging indicators, if I'm lagging performance, if I put a little bit of Bitcoin, 1 to 3% into this portfolio, it's going to enhance my returns.
Bitcoin, I think it might be good if it stayed at 47,000 for a year, because then people wouldn't worry about buying a pizza that's worth a Mercedes 2 years from now.
The joke in the Bitcoin community is the real Bitcoiners want the price to stay low so they can accumulate more of it, right? But obviously, when you have this much demand, the price got to go
a year from now, it's where?
It's much higher. I think that if this continues, if we have 12.5 times more demand than we do incoming daily supply, and remember the halving is coming, so we're going to go from 900 Bitcoin to 450 Bitcoin a day. I mean, this thing's going back to its all-time high. It's pretty much guaranteed at this point.
So it's really not that hard to see why Bitcoin has been doing well. Now, obviously, the technicals are still showing us that we're in a good area. We're not in a bearish area. We're definitely in an uptrend. We're in a bull trend, but we are getting to that spot again where if we can't break above, that 0.618 Fibonacci and hold above it for a lengthy period of time, then you may have some of these people starting to sell, right? I mean, people are going to take profits on the way up. But as I've been saying, even if you do get some of these dips, 44, 40K, are we going to go lower than that? Again, the probabilities were a bit higher maybe a couple weeks ago. Right now, I would kind of keep it simple. Just let's focus on at least the $40,000 to $44,000 range if we even get down there, right? But again, why are we seeing these inflows right now? Well, Michael Saylor really just explained it quite simply.
Well, I think a lot of this is just indicative of the popularity of Bitcoin as an asset class. It's now the world's most popular investment asset. It's novel, it's digital, it's global, it's unique, and it's uncorrelated to traditional risk assets because it doesn't come with exposure to any given country, currency, company, quarterly result, product cycle, competitor, not to weather, not to war, not to an employee base or supply chain. And so that makes it a natural addition to the portfolio of a responsible investor. There's 10 years of pent-up demand. People have been waiting for these ETFs. And finally, mainstream investors are able to access Bitcoin. And I think that's what's driving the surge of capital in the asset class. And initially, there was a rebalancing as people were moving capital between the futures market and the miners and MicroStrategy and the ETFs. But following that rebalancing, I think the assets found its footing. And now people are beginning to realize that there's 10 times as much demand for Bitcoin coming in through these ETFs as there is supply coming from the natural sellers who are the miners.
So that's it for me today, guys. Super quick update. I just wanted to let you know what's going on. I know a lot of people are getting excited, and I mean, yes, there's many reasons to be excited right now. I think 2024 is going to be a phenomenal year. I think we are going to have a new all-time high this year. Yes, I know a lot of people think that's crazy, but Is it really that crazy, guys? I mean, we got to get to 69. We made it to 50. That's not that much farther to go, right? So thank you again for coming back to the channel. You guys rock. If you do want to trade, check out Apex tutorial right here. And also, they do still have that 15,000 ES Apex tokens that they're giving up, as well as if you want to check out Levex, they'll match your trades up to 5,000. So all that below, guys. Thank you again. I know today's video was super short. Just want to give you a little update where we're at right now. I love you guys. You're awesome. Until next time, stay crypto. And of course, peace out.